Hey, Crypto Hotep here with another investing video. We are on week 23, moving right along here of the family portfolio. If you're unfamiliar with the family portfolio and this weekly tracker I like to record, feel free to go to week number 1. It'll showcase the methodology behind this thought process here, why I'm doing it, and what we look to gain out of doing this. In a nutshell, what I did was I created a short list of stocks for my family to choose from. They chose their stocks, they chose the companies they like and who they thought were of value to them. We then used M1 Finance for our technology and for our broker. Within M1 Finance, you can create one big portfolio, and within that portfolio, you can have sub portfolios or pies, is what they call them. Each person in my family has their own pie, and in each pie is their allocated stocks. Every week we track the account balance of the portfolio, whether it goes up, whether it goes down, whatever. We discuss the balance. We discuss also how we're feeling, as well as mentally, and what we think of the market. We also go through market updates and anything that's top of mind. These videos are more so investment education and also tracking the investment journey and something as of a resource to my family when I'm gone. But if you find value in these videos as well, feel free to like, subscribe, comment, let me know what you think. But before I begin, please DYOR, please do your own research before you do anything investment or trading related. And this is not financial advice by any means. As you guys are aware, if you've been following, we always look at the week prior before we go to the week current. So week 22, we were at a 776 balance in M1 Finance, $5.06 dividends earned for the family portfolio with a 5.93% weighted rate of return. This was down because of the stock sell-off that occurred last week. Now let's see where we're at today. Week 23, we are at a balance of $821.55. Dividends earned $5.43, so we had a little bit of change pop in here. And then our weighted rate of return is boosted at more than 11.5%. We love to see this. Now let's see what's going on here. Let's go to the activity. So on the activity from this week, from last week until this week, we have several dividend payments here. So we have a couple dividend payments. We have from Lowe's, John Deere and Company, American Express, Costco, Procter & Gamble, Apple, Colgate, and Really Income. Now, if you're just a new viewer of these videos and you're looking at these amounts and you're probably saying to yourself, these are just pennies, you are 100% correct. These are just pennies. But we didn't have to really do anything to get these pennies. All we had to do was hold a very good company, and they would pay you for holding that company or part of the ownership in that company. And so my thought process is to not worry about the dollar amounts of these dividends, but more so the consistency of receiving these dividends. And hopefully we can build our position up so these dividends will increase more. And the goal eventually is hopefully to live off these dividends at some point. Okay. So then with that being said, we have our dividend activity. We've also had a couple buys today. So today we had 5 buys for $16.52. What did we buy? We bought some more Nintendo. Even though Nintendo's down, we're still buying. Celsius, even though Celsius is down, and my wife loves Celsius, we are still buying. We had AMD, and the whole AI trend is bucking right now. We're adding to that. And this was to my portfolio. This was to my wife's portfolio. This was to one of the kids' portfolios here. Costco, one of either to mine or one of the kids' portfolios, and then Starbucks, one of the kids' portfolios here. So let's just jump in to the actual portfolios here. So bottom up, as we always do, let's look at my wife's stocks. So my wife, for I want to say the fourth week in a row, is down trending. So we are down over 24% negative, okay, in the red. Now, why is that? Primarily, it's because of this holding here that we actually just added to. So this is primarily because of Celsius. Celsius is down 56%, almost 57%. Pepsi, Google are still trying to hold the portfolio up, but again, the as of right now, the status of Celsius is still dragging the whole portfolio down. Now, Celsius did have a very good earnings call last week or so, and it showed positivity within the company. I also looked at the chart on Celsius, which I did showcase as well. It is in a key level right now. I did like the fact that we did buy more from M1 Finance at this level. So right now, I don't mind holding this. My wife can handle a little volatility, so we're going to keep that as such right now. Okay. Let's see. Let's go to our middle. Our middle is up respectably here, up over four and a quarter currently year to date. Dividends earned about a nickel or so. And let's see where we're at here. Okay. So currently our middle added, she did add Starbucks. We did add Starbucks to our portfolio for our middle. So originally, we had Amazon, we had Costco, Nintendo, Target. Target was also a new addition. Wanted to add Starbucks as well. Why did we want to add Starbucks? Well, ironically, our middle thinks that Starbucks is headed for a reversal and things are going to look a little bit different. Why? Well, I did mention that the Chipotle CEO, which just happened this week, was fired, and or Starbucks CEO was fired, and then Chipotle CEO replaced Starbucks. So that is huge news. I think that's a very good move for Starbucks. And so I mentioned that to the family. Our middle said, hey, I'm going to add Starbucks. And so we did. Now, as you can see, these allocation percentages have to come in line here. So more than likely, we'll be adding some more Starbucks before we add anything else here. Okay. And we might do a rebalance here of those stocks just to get them accurately targeted. Not sure yet, but just a thought. Okay. And we will go to our Otis. Our Otis having a really good time here. Otis is up over 17.25%. Dividends earned 30 cents here. And we just kept it very simple with our Otis. McDonald's, Apple, and they did add Costco. All of these are in the green. Very substantial gains with Apple. All in all, a 3-stock portfolio that is doing very, very nicely. Okay. Our youngest up an astonishing over 24.5% year to date. 4 stocks. We have Nintendo, we have Tesla, Apple, Starbucks. Our youngest added Starbucks when Starbucks was down and out, and it has increased steadily, and we kept buying it. And this eventually turned from red to green. Another key point, we were buying Tesla when Tesla had a lot of FUD going on with Tesla. And this was red for about a month or so. And that's not even really a long time, but it was red for a while, and we kept buying Tesla during this dip. now up over 30%. Again, Apple, there was time this year that investors just turned their head on Apple and said, nope, we're done with Apple. They're not innovating. They're not doing anything. We're done with them. We like Apple. We continue to buy Apple, up over 30% on this holding. And then Nintendo. Nintendo's rounding it out. Nintendo has been red. They had an okay earnings. Just a lot of kind of unknown with their business model and the whole Nintendo Switch and where they are with the future of Nintendo is kind of up in the air. But kids like Nintendo. Nintendo doesn't have any debt. That's a big deal with me. So it's a good stock for me. And again, the kids can handle some volatility. But this 4-stock portfolio for our youngest, just tremendous. Tremendous. And we aren't changing a thing. Okay. And then mine. So mine, I am up over 8.5%. I believe for year to date, I think this is one of my highest percentages. $4.89 dividends earned. I'm up green on all my sectors here. Technology up over 11%. Consumer staples up over 4%. Industrials and energy 7%. Finance over 12.5%. Real estate is just booming right now. So over 17%. Restaurant and food up over 7.5%. And then pharmaceutical close to 5% year to date. Of course, the meme stocks, which is my lowest percentage of allocation, is down 3%. This was down, I believe it was down close to double digits last week. So we are closing in on there. I can tell you right now, one of the meme stocks is Palantir. Palantir is doing fairly well right now, up over 31%. Again, this is a very low percentage of my stock portfolio, just considering these are quote unquote meme stocks for now. Palantir is a good company, but I just chucked it into this meme category because this is what I've seen through my research that a lot of people have been using it as and trading it as such. DTE up over 9.5%, and then Robinhood, UPS, and CrowdStrike. I think CrowdStrike is a good buy right here, and they just declared a dividend as well. And so, with that being said, we will just follow back up here and just recap very briefly. So as of 8/15/2024, our balance is 821.55 year to date with a weighted rate of return of 11.69% and dividends earned of 5.43%. Kind of switching topics here. One thing in the markets that has gained a lot of attention, again, is Warren Buffett. It's like the second week in a row. He really doesn't gain attention like that unless it's like the end of the year or so, and one of the Berkshire conferences. But this is the second week in a row that he has gained attention for his holdings, his latest holdings that he currently has. Why is that? Well, because the latest filing of 13F came where mostly all the investors have to kind of bestow what they are holding, what they sold off, their new positions, those type of things. And a couple things stood out for me with Warren Buffett's portfolio. Now, I did look at Warren Buffett's portfolio. I like his portfolio. I think his portfolio resonates with my way of thinking. I also looked at like Bill Ackman, Mike Blurry as well. But just with my style and how I like to hold good companies for a long time, Warren Buffett is my basically mirror reflection. One thing that I did find out, though, that was very astonishing was he sold out of Paramount Global and Snowflake completely. As you can see, some of the other positions he's reduced, like T-Mobile, for instance, Chevron, he's reduced. But these are only two that he actually sold out completely. New buys were Heiko Corp, and then this one was very surprising, Alta. I was very surprised by this, and I will be looking into their financials a little bit more to see what the deal is with Alta. But this is a it's a different stock for somebody of, Warren Buffett's caliber, that I think, but I'm pretty sure he knows something, or he's found a gem, so to speak. Now, we always have to remember, though, investors are not 100% accurate all the time. And, sometimes you have to take things with a grain of salt. But this does intrigue me that he has his eye on Alta Beauty. So, very interesting. But with that being said, guys, I will cut this video. We are nearing 16 minutes. If this video was helpful, please, again, like, subscribe, comment, and let me know what you think. And as always, thank you and happy investing.